Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Monday, 4th day of June 2018, and this is the daily report for gold and silver. The dollar did close lower, but well off of the lows today, so we still saw some pressure on the precious metals. Gold closing down about $3.40 at $1295.90. A 1 cent decline, $16.42 in silver, and as I said, dollar lower, about 15 points lower at 94.01. The other added detail was a strong equities markets with that risk on environment, 178-point gain, 24,813. Bitcoin futures closed nominally higher, up just under $100, 75.35, 75.25. CBOE and CME futures exchanges. Traders, gold for the second day in a row has closed lower under 1,300. Today effectively closing at $1295.90. That is a net drawdown of about $3.40. We did send out a special trade alert this morning recommending that we adjust stops to $12.85. I will cover that in detail in just a second. However, before I talk about our adjusted stop, I want to take a look at the dollar because we can all acknowledge that it has been recent dollar strength that has been so devastating to gold. And over the last week, it actually broke above what I consider to be a pretty key level that could have provided some resistance. And when we look back historically, what we can see is there has been a point in time recently, and this of course is back around November of 2017, as the dollar was coming down, it did go up and in fact broke above this particular level for the shortest period of time before returning to a downward channel. And it is because of that that I think that this is such a key area, these tops right in here. Because if we draw a line straight across from where those tops ended in this prior example, we'll see that the precise point before the dollar index broke and began to trade lower was exactly that price point. That tells me that we could in fact be seeing some resistance developing at this particular price point, and of course we know that dollar weakness will return gold to its former strength. If we see the dollar weaken, we really don't have a major level of support until we get to about, call it 91.50. There's a couple of different areas in between that, in particular one at around 92.50. But that is still quite a ways away, and considering the dynamic move that the dollar had, if in fact it does weaken, we could see gold really return to its former glory. And traders, one of the most prevalent current geopolitical issues that could affect recent dollar strength is the trade dispute between the United States and China. Now, according to a report by the New York Times, U.S.-China trade talks have ended in an impasse. Even more alarming than the impasse of trade talks, which ended in a stalemate on Sunday, China said that they wouldn't step up its purchases of American products if President Trump goes ahead with his threat to tax billions of dollars worth of Chinese imports. This could take our current trade dispute and turn it into a full-blown trade war. Of course, a trade war could have a devastating effect on the dollar, and it would also have a very bullish effect on the safe haven aspect of gold, which brings us to our current stop and the rationale behind moving it. The low that we've had recently has been at around 1293. We've had a stop at 1291. However, my sense is that what we see developing could be something that develops over time, and I do not want to be stopped out of a trade if it is occurring just prior to a major upside move in gold. If you notice the chart that I've put up on the screen, our critical and key area that we've spoken about time and time again has been 1288. That is the 61% retracement area. There are some lows below there. However, this to me is a key area. So originally we had placed our stop below the low of this particular candle right here. And it didn't make sense to me that if the market would weaken a little bit but stay above 1288 to get us knocked out of a trade that I believe if it works in the long term, will take this market well above 1300 and at minimum to about 1320. And it is for that reason that we adjusted the stop to 1285. Therefore, my recommendation is to maintain our current long August position and to maintain our stop that we adjusted today. Traders, as we talked about in our opening letter, it is a risk-on environment and a strong dollar that has put so much pressure on gold recently. As far as the dollar is concerned, we did look at a couple of charts that indicate that we might have seen a potential top in the dollar index. As long as the dollar remains strong, we're going to see pressure on the precious metals, but I believe that with the current trade dispute breaking down in China, that could be extremely bullish for gold in a safe haven aspect, as well as bearish for the dollar. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.